Hey everyone, welcome to another podcast of Marketing 101. We've got a very special guest this week, Nolan from Bradfield Accounting. I know you weren't expecting that, but this is really important stuff. He's got some great tips for you as a business owner. Listen into this one right till the end. I'm sure he's going to drop some bombs for you. Thanks for being here, Nolan.
Happy to be here. Super glad. Thanks for having me.
Yeah, of course. Tell us a little bit of how you got started in all this, how accounting, got you interested in that to be your career and all the good stuff that follows.
Yeah, first off, appreciate everyone who saw accounting in the title and stuck with it and is going to stick with me to the end. I will deliver on that promise for you, hopefully. So, interestingly enough, I did not go to school to be an accountant. I know that's shocking out there for people, but I actually went to go be a psychologist. I was really fascinated and always have been by the reason people make decisions, why they make decisions, maybe why they don't make decisions. But somewhere along the way in my freshman year, I got really kind of into accounting and enjoyed sort of aspects of it that I guess still to this day are a little bit hard to articulate, but really fell in love with it and graduated, went to work for a very large international public accounting firm. I worked on a really large public 5 company size wise. Did that for a couple of years, but ultimately left because it just wasn't fulfilling, if I'm being honest, in terms of like what I wanted to do and so forth. Went to work for private, took a company public. Again, really enjoyed it. But at the end of the day, there was something that was still lacking in terms of what I was working on and sort of what the calling for me was. And so for the last 12, 13 years, I've been working with smaller businesses, founders, business owners, entrepreneurs, to help them sort of understand how accounting can actually be a positive and not something that they hate, because I get it. Most business owners will tell you that the thing they hate the most about their business is the accounting and financial side of things.
Mm-hmm. It's true. It sure it is. But I found it so important early on when you first start off, you try and keep the things, the meat and bones, right? With financing and all that. But once I did it again, I don't know if you know my story, sold my practice in Canada, moved to Florida, and then had to do it again. The experience is the best lessons in life. So I knew the first thing I had was an accountant. She drafted my whole LLC. She created the name for it, for Pete's sake. I mean,
that's great.
Just that was it. And then it's such a great tool to have that because they can guide you in the right direction. Anytime we applied for a loan, we got it just because our profit and loss statements were there. Our balance sheets were right. Everything was just right. It was proof of everything. So it plays a huge role in it. So, who's your ideal client? Who do you enjoy working with the most when it comes to accounting and businesses?
Yeah, great question. So, as I sort of alluded to, where we focus now are really with like founders, business owners, entrepreneurs, and I'll say closely held, meaning like maybe 1, 2, 3 business owners at most, kind of within a business, just because it's easier to sort of drive change in a smaller sort of decision-making environment. But beyond that, really what we try to focus on is helping, businesses that are looking to grow and are purpose driven. And so we want to help them not only maximize what the business can do for them professionally, but how that translates to helping them personally and helping them fulfill personal goals. Because when you're an entrepreneur, when you're a business owner, when you're a founder, that Venn diagram overlaps very significantly, right? Like it may not be a solar eclipse, but it's pretty close in terms of like the overlapping sides of those things. So, that's kind of like the ideal client that we work with, but the reality is where we meet them can be very different. So in some capacity, we will start out and we will help businesses who are sort of just getting started. Maybe what they really need, kind of what you alluded to at the beginning, is really just some solid underlying foundational things like good bookkeeping and so forth, to make sure that they have those when it comes to compliance type things. So when you're preparing your taxes, trying to file for apply for loans, that you have the documentation necessary to make that an efficient and sort of a painless process, or at least as painless as possible. But then there are clients who have grown and, maybe they're approaching the $1 million in annual revenue mark, or maybe a little bit below that. And they are sort of, I don't want to say struggling, but they are hitting a bit of a plateau or maybe a ceiling where, for whatever reason, the business isn't scaling past that point as efficiently as it was before. And so what we do is we kind of come in and help them make some modifications to the way they're doing things and sort of ultimately help them get to where their goals are. which for a lot of people is kind of where we fall into the third bucket for people, which is more of a stewardship, like legacy approach to things, which is those are the clients where the success of the business has been there and it's proven and it's holding steady, but they sort of have this mindset shift of each dollar I make is actually less important than the way I spend the next hour of my life. And so what we kind of help with them in those scenarios is we still want to deliver them the right experience and have the right strategies and things that are taking place, right? They're not necessarily looking to be stagnant in their financial side of life, but they also don't necessarily want to be spending all of their time and cognitive energy on those things. And so we will help oversee all of that for them, find the right professionals, implement the right strategies on their behalf, so that really they're just in the beginning when we describe it to them and they authorize it, and then at the end when they sort of have to sign off on it and it gets executed. But all the in-between stuff that usually is where it bogs people down, that kind of goes away and gets taken off their plate.
Yeah, I love it. And that's why we delegate. I mean, that's why you need to
Yeah.
delegate this stuff, and have
Yeah.
people like you in our corner plays a huge role. Because when you're first getting started, I know there's the excitement of getting started with your career, and there's the initial setup and the initial things that start. You're not thinking about retirement, at
Yeah.
28 years old. You're really not doing that. But
Yeah.
your accountant is. Your accountant's thinking what happens on the three possibilities of an exit strategy. One is a long, successful career where you build up assets and you need to turn them over. One is a pretty good career where maybe there isn't assets, but you definitely want to sell the business. And one is, traumatic, where something happens and we just need to fold it over. It's so sad to see service professionals. They don't ever get to that point. They just either close their doors and walk out. And I feel like that's just not having the right people in your corner, not having that accountant or that firm that does that asset protection and helps you move forward. I mean, some people are listening right now being like, man, I haven't even thought about any of that stuff. I'm like, well, you definitely should. No matter how young or how old you are, you definitely need to think about this stuff and have the right people in your corner. So it's really cool what you just said, almost like a practice management type thing. And my curiosity is like, well, you know nothing about dentistry. You know nothing about chiropractic. You don't know. So if I'm listening right now, I'm like, well, how are you going to come in and make my business better? But
Yeah.
it's amazing how mathematics works. The numbers are always the numbers.
Yes.
Yeah.
So I will say I'll add to this. A lot of our clients happen to be in sort of the medical professional space. So dentists, chiros, doctors, things of that nature. So I am not one, don't play one on TV. Didn't stay at a Holiday Inn last night, but definitely still sort of understand the nature of it. And I think it's important to understand is on a fundamental level, there is a commonality that exists between all businesses, and even more so within sort of the service provider business, and even more so as you move up within the medical space as well. And so whether, even though I may not be one, I do understand the nature of it. I think the important thing that often gets overlooked in all of this is the approach and mindset that we have in terms of how these things actually translate into success for us. And so, like most business owners, right, they don't like accounting. But the thing you have to understand is that as human beings, when we don't like something, we avoid it. That's just how we operate, right? But that also means that if we do the equation here, right? Again, an accountant doing equation, the avoidance results in us, or the aversion to doing something we don't like means that we're also not paying attention to the accounting or the finance of our business, maybe as closely as we should. And that is really an underlying symptom or problem that exists that we sometimes have to address first. Because the commonality that I see is businesses will come to us and they say, I need a better bookkeeper. I need a better tax preparer. I need someone to do this. And we always listen to that, but we also want to understand better where that's coming from. And oftentimes it's coming from a place of the avoidance that we talked about, and the reason that avoidance occurred. Maybe it's because they had a bad experience with a previous accountant or bookkeeper, right? And that they maybe lied to them or did some stuff that they weren't happy about. Maybe the information they've gotten in the past is incorrect, so they don't trust the piece, if you will, right? So there's an underlying trust issue. Sometimes, and this is the most common thing, is that the information being provided to them that they're supposed to be using to run and manage and scale their business is not understandable to them, not through any fault of their own, but because oftentimes it's being presented by an accountant to another accountant, even though the person who owns the business is not an accountant. And so what you end up getting is like these financial reporting packages that are more or less in Latin to the business owner. And so we have to sort of help them understand, like, it's okay that you don't understand it. So let's figure out how we can present it in a way that you do understand. And then there's the piece, which is the information that's being provided, it just isn't timely. It isn't coming to them in a way that is actually usable for decision making. Because ultimately, and this is sort of the thing, the big picture thing I think is important to understand, is that you can grow a business on intuition and sort of understanding your customers to a certain point. But to get beyond that point, you have to look at a broader scale. You have to understand the macroeconomics of the environment you're playing in. You have to understand a bit more nuance within the marketing and sales perspective of that. And all of that comes down to utilizing data-driven decision making, meaning that you can't just rely on intuition anymore. And that's, I think, where the intersection of accounting or data in particular comes at a head and can actually help businesses grow and scale. And that's, I think, the real benefit that we try to help business owners understand. And once they do, then they start leaning in more and they start to see some real progress on that side of things.
That's great. Yeah. So, I mean, you answered a lot of questions that I was going to bring up there. The one was, and it was more of a test. The question I asked is like, you're not a chiro, you're not a dentist, but then you came back with, I work with dentists, I work with chiros. That's perfect. That's what the listeners want to hear, is that I don't want to be your first chiropractor. Because there's a huge learning curve for the accountant in that. They're like, well, I help dentists, but I've never helped a chiropractor before. It's got to be the same. And then you realize this is very different. Services are very different. Overhead's very different. Everything's very different. So that's great that you actually help service professionals. That's amazing. So what are the biggest things from your perspective when you hang up the phone or you send the email and you hit send and it's done? What are all the swear words that you say afterwards with your clients that you're like, why do they keep doing this? I've told them 100 times that this is not. What are your biggest pet peeves with business owners that would be so simple if they just had it right on day 1 or day 5? It would save them 5 years down the road.
Yeah, it's a great question. There's a couple things that come to mind. I think one is a little bit of kind of what I mentioned up front, but I'll expand on a little bit here, which is having a viewpoint of that accounting should have a seat at the table in the decision-making process. I think oftentimes when we run a business, the things we tend to focus on the most are the most glamorous: sales, revenue, marketing, things of that nature, because we see it generating tangible dollars in our bank account, right? Like there's a very obvious correlation between the things we're doing and the outcome that we get from it. With accounting, it's less so, but it actually factors in very broadly across all those spectrums. Like you aren't going to understand what the correlation is between your marketing and sales technique and the revenue you're generating without the accounting piece to it, right? You're not going to understand, and this is a very common one I see, which is people think they know what the most profitable part of their business is when they actually don't. And so they're spending a lot of additional capital, time, money, trying to drive people to a particular offering, service, product, when in actuality, the margins on it are much lower than they think. And in actuality, they should be allocating more of the resources to service B or C, which is oftentimes an ancillary thought to them. And so sometimes it isn't like these huge changes that you have to make. It's just sort of like better understanding where the stuff is actually coming from in your business. And so I think that piece up front is sort of having a more open mindset of like where accounting is and what it really means to your business is very critical to that. I think the second thing I'll say, that I don't want to say it's a pet peeve, but I think business owners would be in a better place if they understood this, which is oftentimes when you get to that point as a business owner, you've been bootstrapping it. You've been doing it yourself. You have to rely upon yourself for a lot of the decision making and execution of things. And so it can be hard to break that mindset. But when you start making really important decisions, you need to be having a sounding board. You need to have the right professionals in place to sort of evaluate that for you. Rarely do you want to make a decision without getting a second opinion on something, right? I mean, the medical field talks about this all the time, right? You want to make sure that you're getting the right advice, and that as the client and as the patient, that you feel comfortable with what's being recommended to you. I would say the same thing to business owners. Someone comes to you and says, hey, I've got a loan opportunity for you. You should do this. Great. Throw it over the fence to your accountant and have them run the numbers for you. There's no harm in that, right? You're just going to get a second opinion. What's the worst they say? Oh yeah, it's a great thing. You should go ahead and do it. Great. Now, at least now you have the comfort of it. But what if they come back and say, like, this is not what you want to do because of A, B, and C? Well, now you've avoided a potential real ramification that you wouldn't have even known existed until probably much further down the road. And so just making sure that like you understand that if you want to have a good relationship with like accounting, you actually need to treat it like a relationship, which means you have to participate in that conversation. And that means bringing questions to the table, looking for the feedback that you're getting and participating in that process.
Yes, man. Awesome. That is so great. Yeah. How many times we're like, oh, we go to the bank and they offer you something. Hey, we got these
Yeah.
loans for 5%. And you're like, whoa, they're typically 7 or 8%.
Yeah.
And we don't even call you. We're just like, yeah, give
Yeah.
me the loan.
Yeah.
That is
Well,
ridiculous.
I'll
When
give
you're
you
accounting.
I'll give you a case in point here that was actually just happened. And it was a good learning experience for the client because it almost bit him in the butt, to be honest. So he's a dentist. He owns his practice. He owns the building that the practice is in, which is great. And he was refinancing the building, and he didn't tell me he was doing this. We got to the end of it, and he goes, "Hey, we're about to finalize this loan. Can you send over the financial statements?" And I go, "I can, but can we talk about this first? I just want to make sure I understand sort of what you're doing to make sure I give the right information and so forth." Right. So we have a quick call, and he explains to me, he's like, "Yeah, well, so I'm refinancing the building. It's going to save me $10,000 a month in interest." That's awesome. He goes, "I'm also refinancing all my equipment debt." And I go, "Well, why are you doing that?" He goes, "Well, it'll allow me to pay it down faster." And I go, "Well, walk me through that. Will you? Like, what's your, I'm not saying you're wrong, but walk me through that, like the explanation." And ultimately, cut the story short a little bit, what I ultimately helped him see was that it was actually a worse scenario for him to consolidate all that, because all of that debt then gets like combined into once, and you actually end up paying all that equipment debt over the same life of the building, when in actuality you might be able to pay it off much faster through some other payment techniques, and you could pay it off maybe in like 6 or 7 months as opposed to 30 years or 10 years or 20 years, right? And
Great.
it's like, you're going to save money on the building, but you're actually going to lose some money by trying to wrap this into it. And so we actually paused that, ripped out all the equipment debt, and just refinanced the property. And now we're doing some other sort of pay down techniques for him on the equipment debt. Like I said, that's going to get it paid off in about 6 or 7 months as opposed to 5 years, or even worse, 20 years. And so that was an example of, like, if he hadn't have called, he would have put himself in a less desirable spot long term.
That's great. I mean, yeah. And the equipment's not going to last 30 years.
It is not.
No,
But understandably, like that, I totally appreciate why that wasn't clear, because that wasn't what the bank was explaining to him, right? And why would they, right? That's not in their best interest, because they make more the longer you pay them and the more you pay in interest. I'm not saying they're bad people. I'm just saying that's how they make money. That's their operating structure.
Yeah, no, I'm just kidding. Yeah, no, you're right. You're absolutely right. That was great. And see, you're just safeguarding the business. It's somebody actually on your team. I always joke with accountants, before we hire them or work together, I'm like, you either work for the IRS or you work for me. And, they know, who's going to answer. And there's been some that are like, no, I work for Canada Revenue Agency. I'm like, no, I'm not hiring you. Like, the taxes are going to be paid. It's just, you got to watch out for my business or whatever it may be. So very interesting. Yeah, very cool. And that's the thing of delegating. And I don't think business owners look at that as delegating. We don't look at it as our accountant as delegating stuff off of us. We look at it as something that we need to have, or something that is a must have, or we don't want to go to jail for filing our taxes wrong. More of like a consequence type thing rather than an actual teammate, which is awesome. I mean, that's how we should look at the bookkeeper, the accountant, the practice management, the coach, whatever we have in there. That's great stuff there too. Awesome. What would be some things that inhibit working with you? Maybe some stuff that doesn't jive with you or doesn't jive with your ethos, like you said, like your mission. You're on a mission here to help service professionals get to an end goal and to be successful and build their bank accounts. But what are some things that inhibit that?
Yeah, so it's kind of the inverse of like our ideal client, right? Which is there's nothing wrong if you scaled a business or a practice to a point and you're happy with where it's at. God bless you. That's wonderful. I'm not going to tell you you should do something else. But it also means that I probably can't provide the value to you that I want to provide. And so in those scenarios, like, I'm not the right person for you. And frankly, like, any professional should have the decency to tell you that they aren't the right person for you. I think that is a very big distinguisher between someone you should work for and someone you should work with. And I don't mean that to pat myself on the back. I just mean that, like, that to me is honesty and transparency in a relationship.
I love it.
I think that, I said up front that I went to school to be a psychologist, and I want to come back to this because at my core, I am still a psychologist, even though I didn't get a degree and I don't have that certification. It's more so that accounting is the tool I use to be a psychologist and help business owners sort of work through things. And I think that is the client that we like to work with, the person who is interested in, I hate this word, but a more holistic viewpoint of sort of how things are operating. If you're coming to me and like, I just need you to do X, that's great. I'm looking for a relationship with a client. And to me, that means that you're open to hearing my opinion and feedback, because ultimately I view my job as to make you better and help you be the best that you can. And if you're just going to delegate and say, I just need you to do this for me, it's wonderful. Like, there are people who you should do that with, but that's not the relationship, because again, to me, that isn't necessarily the relationship we're looking to have.
I love it. I mean, that's a true person that's on your team, and you enjoy growing and scaling businesses. You want to be a part of that adventure that's there. Cause I think entrepreneurs is why it goes through our blood, is because we love that. We truly do. We love the work it takes to get there, the results we get from it. And I found that defining entrepreneurship over my career is that's the real difference. Is not, we don't mind working the 100-hour weeks. We complain. We don't believe in work-life balance. Obviously, we don't even know what that. It doesn't even exist. It's a unicorn. And so all these little things that have developed us to be true entrepreneurs, I think that's where success comes from. It's just understanding those fundamentals, that growing and scaling is a process. With math and physics, it's the same process, because there's only one math and one physics. So numbers don't lie. But the industry may change, and that's what I love about it. So having somebody like that is, I think, an accountant is probably the most influential delegation you can have, next to your office manager or CFO. Like that's really it in the structure in a business. It would go the owner, the manager, and accountant are probably tied beside each other, then all the other employees below, because otherwise you're not, the tires are not all going in the same direction. So that's my perspective, and that's why you're on the show, is because I truly think this stuff is great. So that's awesome. How do people get a hold of you? Do you do any consultations, any deep dives into businesses? Do you like virtually? Do you like it through Zoom? Do you like it just on the phone? Give us how to contact you.
Yeah, so you can obviously find me on LinkedIn if you want, Nolan Bradbury. Some people, they feel more comfortable sort of going through that format. It's a bit sort of more private for them, and they don't have to share as much information. If you're interested, we also have a contact form on our website, bradfieldco.com. You can go there and sort of submit any questions you have, and a human being will get back to you, not an AI bot or anything like that. We'll actually respond to you based upon what you're saying, and we'll let you know if it's something that we think is worth having sort of I'll say free consultation to kind of talk with you about, or if it's something that is probably best served going to someone else. And if so, we'll try to sort of point you in the right path to someone that, that can help you with that. We are largely a virtual business, and that's kind of a function of COVID and how we can now work with people all across the country, which is awesome. I do prefer Zoom because, to me, I can actually see you, and I can see your body language and your tone, and so much of communication and me understanding how you react to something I say is seeing the way your body changes or doesn't change in that communication. That's why email, while amazing, I think a lot is not ideal for a lot of things. It's great for documenting, but it's not great for actually having conversations. And so, I like to have these types of calls where, you can see me, I can see you, and we can talk through whatever it is that's on your mind.
That's awesome. Yeah, me too. I've never ever liked digital, but after COVID, I mean, the Zoom thing's growing on me. I get it. It works. We got podcasts now. It's awesome.
Yeah.
So that's great. Thank you for your time, man. You dropped some great stuff in here. I mean, if you are looking to level up your accounting game, if you're looking to grow and scale, and you feel like the team around you isn't the full all-stars, you're not the full Dallas Mavericks, then it's time to step up and get some of these all-stars on your team. And Nolan is one of them. So I'll put all the links in and all the feeds there for you, and the website, so that you guys can just click and go, get a hold of him. He's a wealth of knowledge. Thanks for being here. I really appreciate your time, Nolan.
Thanks for having me. It's a great conversation. I appreciate it.
Yeah. Take care.